interest rates are the cost paid for the use of borrowed money or the return earned on money invested. That is, when a person or company borrows money from a bank or other financial institution, they must pay an interest rate on the money borrowed. On the other hand, when money is invested in a financial instrument, such as a bond or a savings account, a return is received in the form of interest. In Colombia, interest rates have always been very unstable, rising and falling according to the economic and political situation of the country and the world. However, in recent years, Banco de la República has taken prudent measures to maintain financial stability and control inflation, which has kept interest rates more stable. In the short term, it is difficult to predict how interest rates will evolve in Colombia, but they will probably remain stable and adapt to economic and political circumstances. In the medium term, several factors, such as the global economy, inflation, the exchange rate, the Colombian government's fiscal and monetary policies, and the supply and demand for credit, could influence interest rates in Colombia. In the long term, it is important to keep in mind that predictions about interest rates in Colombia may be uncertain. But many experts believe that they will remain relatively stable based on historical trends and the current economic outlook. It is crucial to remember that interest rates vary widely by country and region, and are subject to unpredictable changes due to economic and political factors. Therefore, it is essential to closely follow relevant trends and news to make informed investment and lending decisions. Let us look at two examples. 1. In the United States, monetary policy and interest rates are set by the Federal Reserve Board. In response to the COVID-19 pandemic, the Fed cut interest rates to near zero in March 2020 in order to boost the economy and avoid a recession. Recently, the Fed raised interest rates by 0.25% to set its target range of 4.75% to 5%. The Federal Open Market Committee voted unanimously to make this increase, despite the risk of exacerbating the banking crisis that has impacted global markets. These are the highest rates since September 2007, just before the financial crisis. The Fed has indicated that it may continue to raise interest rates in the near future. 2. Argentina's financial regulator increased the interest rate in a single day by 10 points, reaching 91%. In order to slow the depreciation of the Argentine peso and prevent savers from exchanging their pesos for dollars. This is the second time that the interest rate has been increased in 2 weeks, as inflation rose to 104.3% year-on-year in March. The central bank agreed with the International Monetary Fund to keep the interest rate above inflation. However, such a high interest rate may have a negative impact on economic growth and on the financing capacity of the Argentine government, which is currently facing difficulties in accessing international financing. Since January, the government has paid approximately $11 billion in interest, and with this latest interest rate increase, that amount will increase to 1 trillion pesos per month. Globally, today's economy needs a monetary policy that balances economic growth and long-term financial stability. Since interest rates are a key component of monetary policy, it is important that they be set appropriately to promote economic growth and avoid uncontrolled inflation. In general, economies need interest rates that stimulate investment and consumption, which can help boost economic growth and create jobs. However, it is also important to avoid interest rates that are too low, as this can lead to inflation and financial instability.
Created using Powtoon.